Alrighty, today is February 11th. It is 10:44. I just wanted to recap today's trade in Asia session, which is about to close right now. I would have taken this on my Express account, but I'm about to go on my cruise, and I promised myself I wouldn't take any trades before my cruise or during my cruise. So here we are practicing. About to hit TP anyway, so I will just explain my thought process here. So here you're on the 5-minute. Okay, we have current trend is downtrend here. This was during New York session. Then we had our little pause here during sessions while we're swapping, and this normally tends to happen. Okay, that you can, if you trade long enough, you've seen this pattern. Okay, New York session ends, and we start reversing, and you go to fill in liquidity so that you can have your next move for tomorrow's New York session. So New York open, or Asia opens, and I'm starting to look around 8:30. 8:30 to 10:30 is the only times I trade during Asia. So we're right around here, and as you can see, I got caught in the chop a little bit, and this is when I started telling myself, listen to my confluences, listen to myself, follow my rules, follow my rules. So I did get caught here, literally like 50, 100 bucks. And then I caught this move here to the downside. And this is the setup that I look for every single day, okay? This is when I started realizing, alright, focus here, focus here. We had accumulation right here, okay? If you look on the 5-minute, we had chop, we had accumulation, okay? Then, also another confluence, my EMAs just recently crossed on the 5-minute and on the 15-minute. So I knew trend has changed. We're now looking for longs. So back to the 5-minute. At my entry here, there was chop. And if you know anything about AMD, you know accumulation, manipulation, distribution. So I was just taking advantage of the AMD cycle inside of Asia market. I seen we had a drop below our accumulation and reached our 5-minute fair value gap from our previous move up. We respected the 5-minute fair value gap. This was also equilibrium from this high to this low. And this is where I caught my entry at, this candle here. I waited for this candle to close with this strong volume to the upside. Waited for it to close, got my entry. Stop loss at the low. Take profit. Honestly, this take profit I use differently. Normally I target the highs. Okay? But I did use something a little differently. But I did change it up too, because I don't think I'm still fully using it. I'm testing something right now called standard deviation. And this would be considered my manipulation leg of the accumulation. So that's the leg that manipulates. Now we're back into a bearish move, or into a bullish move, sorry. And that would be called standard deviation. So you mark the manipulation leg, and with the Fibonacci retracement settings marked out properly, you have your zones here, 2 and negative 2.5. And as you can see, negative or 2 also lines up with a point of liquidity, a high, and it's also targeted by the weak high. And on the 15 and 5-minute, you can see, oh well, it has changed. This was weak high, and this was weak high. Yeah, weak high. So we're bound to target the high side until we get a reversal. So we haven't quite hit my TP yet. We keep nipping off of it. It's actually kind of crazy. But that is my rundown for today, for February 11th trade. Yeah, stay locked in. Stay focused on your rules. Pay attention. Pay attention.